AMT is basically a second tax calculation running alongside the regular tax system. You compute tax the normal way, then you recompute it under AMT rules. If the AMT number is higher, you pay the difference as alternative minimum tax. On the EA exam, they love the phrase parallel tax system because that's the whole concept in one line. The AMT calculation starts with your regular taxable income. Then you make AMT adjustments and add preference items to arrive at AMTI, alternative minimum taxable income. Then you subtract the AMT exemption if you qualify. Post-TCJA, the exemption is much larger and indexed for inflation. So many taxpayers never reach AMT even with lots of deductions. Here's the key exam takeaway. If your AMTI is below the exemption threshold, you're not an AMT, period. That's why TCJA reduced how often AMT hits individuals. But if AMT is high enough, the exemption phases out and AMT becomes more likely. You don't need to memorize every inflation number here. Focus on the concept. Exemption first, then AMT applies. So what actually triggers AMT in real life? Think high income plus special items. Common triggers include high income with high itemized deductions, exercising incentive stock options, and large long-term capital gains from selling assets. Another classic AMT preference item is tax-exempt interest from private activity bonds. On the EA exam, they'll often hide one of these in a fact pattern. A quick way to keep triggers straight. AMT doesn't care that something is tax-favored under regular tax. It may add it back or treat it differently. Private activity bond interest is the perfect example. Regular tax may treat it as tax-exempt, but AMT can pull it back into the AMT computation. That's why AMT questions feel a little absurd, and that's also why they show up on exams. Reporting is straightforward. Individuals compute AMT on Form 6251, Alternative Minimum Tax, Individuals. The form walks you from regular taxable income to AMTI, applies the exemption, then compares tentative minimum tax to regular tax. If tentative minimum tax is higher, the difference is your AMT. On the EA exam, when they ask what form computes AMT, the answer is Form 6251. Derek is not liable for AMT this year, but he paid AMT in the previous year. How can he get a credit for the prior year's minimum tax that he paid? The options include attaching Schedule J, attaching Form 8801, taking an itemized deduction this year, or attaching Form 6251. Think about which form is specifically for the prior year AMT credit. The correct answer is Form 8801. Form 8801 is used to figure the credit for prior year minimum tax when you're not in AMT this year, but you have AMT credit carry forward available. Form 6251 is tempting because it's the AMT form, but that's for computing current year AMT, not claiming the prior year minimum tax credit. Which of the following would not be part of the computation of alternative minimum tax? The choices are depletion, self-employment tax, certain state and local taxes, and interest on private activity bonds. Think about what belongs inside the AMT system versus what's a completely separate tax calculation. The correct answer is self-employment tax. Self-employment tax is computed separately from AMT. It's not an AMT adjustment or preference item. The other choices can affect AMT because AMT is built by adjusting regular taxable income for specific items, including certain deductions and preference items like private activity bond interest.